Good morning, everyone. Dan here with tradingology.com's trading room for October 6th. Already running on low coffee. That can't be good. My toss decided to lock up on me 5 minutes before the room started, so I've been restarting here and getting stuff back dialed in for you guys. Good morning, Dave.
Good morning, Dan.
You love it when, usually when my computer starts to run hot, it means there's a lot of trading activity going on. I don't know if it's actually something that I've noticed or just a coincidence. So I was like, all right, what's going on? They don't want me to see something.
All those trades are heating up your computer.
The smoke starts coming out of the wire and it's trouble.
Uh-oh.
We're safe, no smoke.
Morning, Andre. We'll get started on some news stuff. Actually, one of the things I didn't mention in the Slack this morning was kind of some funny news. We'll share it when you go over the charts, maybe.
Right on. One thing I did see that we briefly touched on yesterday is slow week on the calendar. Powell's due to talk in 8 minutes, so we'll see if we get anything interesting during that since we're here. Good morning, Eli.
Yeah, you never know. Could happen. Morning, Eli. Yeah, I went through my fourth cup of coffee, so I'm on water right now.
I was just going to say I got a little low, so I might be in trouble here.
Yeah, well, it's still early over there in Minnesota, so.
Let's see, we had, where do we want to start? Should we take a gander at the spreadsheet quick?
Let's do that, because I was kind of reviewing it last night, trying to do a little bit more in-depth analysis on it. And really, we've got a lot of bullish hurting. That's the first thing that kind of stood out to me, is that when you get full bearish or bullish or bearish hurting, and right now it's bullish hurting, when it's full like that, it doesn't turn on a dime. You have to kind of wait for the bulls to kind of come out. So if you go back to like 916, 915 there, not
sorry.
Not that far. Yeah, right in there. It's like, okay, then it kind of dropped off and we didn't get anything in the first column. The first clue that the bullish hurting is starting to drop is when you get those blank spaces in the first and second column, third column, then eventually you get nothing, and then you start to see the bears take over. And that's what kind of happened there. So where we are right now, it looks like a full on bullish herd press. Yeah, football press. They're really pressing that goal line. They're really, really trying to get to that goal line. So I don't think we're going to see any reversal yet. We have to kind of wait to see how that bullish hurting starts to thin out a little bit. If it thins out, that's when the bears have their opportunity to bring some selling into the market. But it looks like right now, the pipeline is down to like 56% in the second column there. When it's down to like 40%, 50%, that's pretty low generally. That means that a lot of volatility is taken out of the market, and the market will continue to go higher. So, I don't think I don't know how far back have I mean, the spreadsheet goes back like 2008. I started keeping it, way back then. I made a lot of changes to it since, but I don't think I've ever seen bullish hurting where it is right now ever turn on a dime and just go bearish. So we're gonna have to kind of sit and wait and see what happens with the market, see if we get any bearish hurting. The other thing that I'm really kind of fascinated by is the fact that all the price anomalies, I think for the past 5 sessions, have all been on highs as the market has gone higher. The last 1, 2, 3, 4, they've been pretty high on those up moves. Not sure what that means in the context of this market, but typically those price anomalies happen only at tops or bottoms. So when the market's down a lot and we get a big price anomaly, that typically signals that the market might be done going down. And when it's up, it could be done on the upside. So we'll see. We shall see, but the bullish hurting really has to thin out before we see anything, I think, on the negative side.
Yeah, first time in a while that MT vol has dropped below that 100% line. So we're 96 from yesterday's numbers.
Yep. And the other thing I noticed too is if you go to scroll over to the right to look at the long-term signal, it actually peaked back in, I think it's August at 0.197. There it is right there. Can't tell the date. It's a line 1171 and 1173. Yeah. So it was a 197. It peaked there and it hasn't. I mean, we're at 1.4 something now, 149, I think. So, it's actually gone down and hasn't recovered.
Yeah, we went down to the 130s and it's kind of hovering between 130 and 140 right now.
Yeah. So just something to keep an eye on. And then I was reading a newsletter last night and it was kind of interesting. They mentioned the fact that September 3rd, 1929 was the date of the rebound. There was an initial drop off in the market in 1929. It rebounded and it was on September 3rd, 1929, that was the rebound high. And then after that, it just went down. I mean, we declined 80%, 85% in the market after that. Well, if you look at the Dow Jones chart on a daily basis, the intraday high for this year was in a rebound after the March low was September 3rd.
That's crazy.
Yeah, so we'll see if we don't surpass that high on September 3rd. It's just an amazing coincidence, I guess. I wouldn't trade on it, but I mean, it is kind of interesting though that maybe there's some sort of sentiment indicator going into rebounds and Septembers and things like that. So we'll kind of see how that plays out. And then finally, in the funny part of the news, John McAfee. Did you hear this? I
did not hear about John.
Strange, huh? There's a warrant out for him. I guess I'm not sure who actually sent out the warrant, but the SEC wants to talk to him about the fact that he is accepting money in exchange for promoting ICOs.
Interesting.
And he had, in fact, the Modern Investor covered that this morning in his video. And evidently, he's charging $105,000 per tweet to promote your.
What?
Yeah. She's the one guy you think that. They're suing him. Okay, so. So he made $23 million from promoting cryptocurrencies. All kinds of crazy coins he promoted.
Interesting. And that, I was going to say, yeah, that's the same guy that did all the antivirus.
Yes, he's the McAfee of the antivirus software. And he is an absolute nutcase. I mean, the stuff he tweets on Twitter is pretty much insane. He's got a lot of followers and he's entertaining, that's for sure. And I think that's his idea. He wants to be entertaining. But,
sure. That's one revenue path, that's for sure. 100,000 a tweet.
Yeah.
That's quite the business model right there.
There you go.
Just use it for good, not evil, right?
Well, the SEC is alleging that he's misleading and, promoting unregistered securities and, all that good stuff.
All right, 9:40. Let's see if anything happens. We got Powell. He's talking from his house, but he's remote somewhere. See if anything happens right at 9:40 here when he starts. Oh, yeah, it just popped up on calls for more help. Breaking news. There's low risk of overdoing it, so go ahead and just give us more.
Yeah. Yeah, don't worry about just print it.
We got a long way to go.
Just print it.
Noting progress made in job creation, goods consumption, and business formation in other areas. So now would be the wrong time to take your foot off the gas. What do we say about twisting the throttle?
Yep.
Doing so could lead to a weak recovery, creating unnecessary hardship for households. Yep, so he's just 11 million jobs lost during it. GDP is more than a sharp. Yeah, I'm waiting for what's it take about a week or two since we're in the fourth quarter now. So we get some of the updates on the Fred charts to see where Q2 or Q3 ended. I can't wait to see that.
Definitely. Yeah, because there was a little rebound in July and August, summer months. But once we go back into the fall, things are going to get tough again.
Well, this guy was on his game. He just started talking for less than a minute and they already had this prep. You think they knew what he was going to say?
Yeah, and they're stuck again. They have not passed a new stimulus bill yet.
Yeah, they keep talking about that second one, right?
It's been a long time.
Yeah. Last I heard, it's around 2.2, isn't it?
Yep.
Yeah.
But it's been a long time. I mean, they haven't done anything since April?
So
and the unemployment insurance benefits have stopped.
So no drastic spikes on him, a little push up, but we usually don't expect it unless it's the full FOMC. If he's just talking to some business, but like we say, you never know if he drops some silly bomb. And as I say that, watch it'll fall out the floor.
Yeah, and the internals are not terribly strong. I mean, we're kind of hovering around the 70-ish area, but that it's not over the 80 area, so it's kind of the average. Yeah. Oh, whoop. Hey, wait a minute. You must have said something evil.
Yeah, they forgot paragraph 2, so there's the volatility we were waiting for.
You just dropped 100 points on the line. But it's funny. We talk about the Fed, printing money, but they don't really print money, right? It's the Treasury that prints money. So when the Treasury releases the bonds and the auctions, the Fed just goes in and buys them up. But they don't buy them up either because it's the primary dealers that go ahead and buy them up for the Fed. And then the Fed credits the reserve accounts. So in actuality, they don't stimulate anything, and they don't print money, and they can't even pump liquidity into the market because the credits that go on the primary dealers' accounts stay at the Federal Reserve Bank, which they can't touch. So the only liquidity they can provide to the market is by urging lower interest rates, getting lower, urging the commercial banks to loan money, which they have been very reluctant to do.
And they got nowhere left to go because it's already at the zero bound.
Well, the 30-year is still at 1 point. In fact, the 30-year has been pumping up a little bit here. And
I just noticed it actually went up over 1.5% today.
Yeah, it did. It was borderline yesterday, about 1.5, hit 1.6 this morning. And we're on the official closing rate, we're at 1.57. So we got room to move on the 30. I think the 30 is going to go below 1%. When that happens, I think we're going to see a lot more market volatility. But it has gone up. Let's see, you got just a month there. Let's see if we go to 2020. Let's see where it started and where we are and what happened in March. We were at 233 at the beginning of the year, so that's pretty high actually.
Yeah, compared to now.
Yeah, compared to now. In March, what did we do? We dropped from 167 down to below 1%. We on the 9th we hit.
Right there.
So I'm expecting that to happen again, maybe even getting down to 0.5% on the 30-year.
There's a couple 117s.
Yep. Then it started kind of drifting back up again. We're at 157 now, but I think it's just a temporary rebound, and the more that the government provides in the way of their own stimulus package, the more bonds are going to be issued by the Treasury to pay for all this, right? And it's the Federal Reserve that's going to be buying them up. So taking that supply off the market, it's the bond market is supply and demand driven. When they take off that supply, you know, and they're bidding up the price of the bond, so they have to buy 82 billion of the long end of the curve every single month. Well, I think it's across the spectrum. I think it's across the yield curve, but the majority of their buying is in the 30-year, and we could see 30-year rates, I think, below that 1% again. Especially if they have to print, especially if they have to pay for this new bill.
Yeah, exactly. And we know that's not going to be the end of it either, because he just said it's going to be a long road to hoe.
Yeah.
He's already setting it up. We got a long way to go. Don't take your foot off the gas. Print this one and get the next ink ready. That's basically what they're saying there, is what I say.
Yep. So, I mean, we don't have a lot going on to the end of the year, although everybody's who's in deferment on the mortgages, I think they expire pretty soon. Unless they've extended the deferments, I'm not sure. They're the forbearance. Haven't heard anything about that either.
Well, if I remember correctly, a lot of that wasn't just, it was, yeah, we'll extend it, but when we stop extending it, you need to pay us everything that you hadn't. So say your mortgage is $1,000. Yeah. Oh, you can't afford it right now. We'll give you a couple months off. But when you come back in 3 months, you owe me $4,000.
Right. Right. That was initially what was going on. I think a lot of people were getting upset and they started posting it. And then Powell came out, and I think Mnuchin came out and said, "Hey, look, that's not the purpose. We want to provide that forbearance for people, but don't make them pay all at once, because it's going to crash the economy when the forbearance ends." So banks have revised that policy, and now they're tacking it on to the end of the loan rather than having a lump sum payment after the forbearance ends.
Well, that's good, because yeah, that would just crush people. There's no way they'd come back from that. It's like, yeah, what's the point?
Oh, yeah. Yeah, that would destroy, I think, whatever recovery safety net we had. But what do they do then? Student loans are on deferment and forbearance until December 31st. So that's been helping, I guess. I mean, especially, if you're a student, getting no interest, and there's no interest on those while they are in forbearance.
Interest is a thing of the past. No interest everywhere.
Yeah.
It's like it's a folktale. Remember when there used to be interest? You get everything for free.
I do remember when they used to.
I was watching, I forget his name. He's a longtime economist, and he was even saying, yeah, people like this low interest stuff. That's not good for long-term stuff. Nothing good comes out of low interest.
Was that
what's that?
Milton Friedman?
It wasn't him. It was another recent guy. I forget his name though, but he's been around for a long time. I could probably find it here.
Yeah, I mean, I don't see any real benefit to being productive. I think one of the reasons why they want low interest rates is to spur lending activity, because we are in a debt-based economy, right? And the only way new money is introduced into the economy in the US and pretty much around the world at this point is by issuing new debt. So if you don't go out and borrow to buy something, and I don't go out and borrow to buy something, people tend to hold on to their cash and they don't spend it. And so where's the growth going to come from?
Right. And that's the part that we've talked about a few times. It's driving me crazy. I love it when I get a lump sum and I just pay off some loan. Yep, that's gone.
That's deflationary.
Yep, that's me. That's my middle name.
Yep, it's deflationary. So everybody who's doing that, like when they get their stimulus checks, or they're the the unemployment checks, and then the stimulus check for $1,200, yeah, it would go in and buy a few calls on the market, and the rest of it's going to go to pay off debt, which is deflationary.
James Grant is the guy I was trying to think of.
James Grant, interest rate observer. Yeah.
Yes. He's a great dude.
Yeah, he is. He is. And I used to subscribe to his interest rate observer, but I mean, it was kind of like, yeah, interest rates are going down. I mean, for years, for years, and that's not a cheap publication. It was like $1,200 a year. But I loved reading him. I just love reading his stuff.
Yeah, I caught him on an interview for someone. I forget who was interviewing him, but it was a pretty good. He's good. I like to listen to him every once in a while.
Yeah.
See what he's doing.
Yeah, he's a very sharp, intelligent guy. Nothing really going on in the market, guys. I think everything's kind of on hold here. We have drifted higher, of course, but I don't think there's going to be. Watch that September 3rd high in the Dow, and if we break that, then we're not on the 1929 schedule. I'm saying that kind of tongue in cheek because it is kind of a coincidence, but yeah, you never know. I've seen weirder things happen.
Right around 29,000 there. 29.1.
Yep, that's the one right there. The intraday high. The intraday high was on the 3rd.
Yeah. They didn't let it get to 29.2. It was 29,199 and 35 cents.
Wow, that's weird.
Yep, Powell spoke a little bit. Things bounced off the 200s, and now we're creeping back up.
I wonder if those algorithms try to do AI on the, do a little AI on a speech. They pick up the negative thing, and boom, sell orders.
Yeah, just a bunch of sell orders to drop it down, and a bunch of buy orders to bring it back up. That's one thing you see a lot too, is those blocks that happen. It's like, that's a machine somewhere.
Yeah, absolutely.
So we'll just keep watching and keep updating you guys.
Eli, we did not get into the VXX trade. We're holding off on VXX trades until after the election because we believe that volatility is going to be a little crazy between now and the election. And this is a very unusual election cycle because of the pandemic and because of, everything else going on in the world right now. So we're going to hold off until after the election. You can paper trade it though.
Yeah, exactly. That's what I was just going to say. Paper traded, so you see what happens and understand how it ebbs and flows. Did you put one on last week, Eli? Let me pull up my. Let's see where that is right now.
It's down a little bit this morning.
Yep, just slightly. It's creeping back down around that 24 level. That's historically been support for the recent history here.
Right.
So the second was Friday, right? Yeah.
Yes.
So if you did put a trade on Wednesday, you're probably right around even if you put a short on. Everybody had a little pop up. Now it's coming back down. So he's got 250 profits after commission. There you go.
Okay.
So look at the exit strategy, and if it's matching your core leg, that's where you want to target. If you want to take it out, it's a good job.
We haven't covered gold and silver in a while, so maybe tomorrow we can do that.
Okay, sounds like a plan.
Yeah. Interesting stuff going on there. Not necessarily bullish, but interesting.
Yeah, I've heard a few, been reading some articles on it, obviously, as well. I do follow that. So I'll dig those up. We'll put some stuff together for you guys tomorrow on that, precious metals and gold and silver. And as always, if you have questions, let us know. support@tradingology.com.
Absolutely.
Let's see. Yeah, we're close to the top. One more time, we're seeing separation from volume and issues, which typically leads to it's not a strong move. So yeah, we'll probably get a bunch of chop today. And usually whenever I say that, something big happens. So watch out. It's like Murphy's Law for me.
Yeah, and with the advanced declines, ADD is at only 1,000, so anything can really happen in this environment. When you get the really strong, like yesterday morning, we were talking about how strong the internals were. We didn't get the reversal. That's typical. That's the kind of the profile of the internals. When you're kind of like in this middle ground here, anything can happen. You're just basically trading the bounces, trading the tops. Yeah.
Short term in and out, exactly.
Yeah, very short term here.
All right, with that, we'll probably wrap her up for the day, unless you guys got a last question that you didn't see. As always, we appreciate you guys coming and joining us.
Yeah, appreciate it, guys. Stay safe out there. And tomorrow is Wednesday, so we got 2 more days in the week. But gather your questions together. I'm sure you guys have questions, but you just forgot them, or maybe you just have been too busy, or your keyboard's not working. But try to get some questions in there.
Yeah, don't be shy if you got a question. Other people do, for sure.
Yeah, but we're going to cover gold and silver tomorrow.
Sounds good, Dave. You enjoy yourself a good Tuesday, and we'll chat with you tomorrow.
You too. Take care, guys.
See you guys. You're welcome, Eli. Thank you.